Okay, hello everyone. Doing a quick video on bending with the market and how I recently transitioned from cash to risk. Lots of requests on X to help folks kind of see how you go from fully invested or invested, whatever your percentage is, to cash as the market is pulling back, and then re-engage and start putting risk on in a progressive exposure manner, aggressive progressive exposure manner, and get out of cash back into positions when the market is turning around. So I thought I'll put that together. Might be long, might not be. I really have no idea. Not scripted. I'm just winging it on this one. I've been promised folks to have that done last week, and I have a lot on my plate. Long holiday weekend this weekend, so I'm gonna try to spend a few minutes here to get this done. So we'll navigate through it together and see where we land. I did make an image that would help us kind of navigate what we want to talk about. So before we dive in, disclaimer: this is not a financial advice. Please do your own due diligence. Not a recommendation to buy or sell any securities that you see today. With that out of the way, let's jump in. The way I want to do this, I'm going to use the QQQ as our barometer for that market pullback, and kind of take a look at how I was pretty heavily invested here. I was not on margin or 100%, but pretty heavily. I think I was around 80% or something like that. And then how I started getting pulled out of the market as the pullback is unfolding. And then how I went to cash in this area. I was able to avoid the gap down, and then going up after that, and how I started getting invested with the turnaround. This is cut from 21st. Obviously, I'm recording this on September 1st, Sunday. So there's a week worth of trading here that's not available, and the reason why is because I'm going to show you, like I said, I've made an illustration of what I was positioned in and how I got pushed out. So let me show that on the chart. But this from here down to here is about 16% pullback. So pretty sizable pullback on an index like a QQQ, all the way slammed down to the 200. Lots of distribution on the way down. Pretty scary. Everybody knows this day, the gap down. So it was scary down here. So let's see how the market pushed me out. You guys, if you look at my X feed, you see me mention a lot. The market pushes me out and then pulls me back in, right? So we'll see how that unfolds. So let me show these. I'm gonna unhide, and then there you go. So that's kind of what I put together last week, and I did not have a chance to make the video. So I'm making the video now, and that's why I've cut this over here. So there's a lot on here. We're gonna go through this in a bit of details to give you a sense of how things unfolded and my thought process around what was going on at the time. But I think this is a really, really, really good representation how I was invested here, and I start selling. So you see I have few sells around the top, and I'll explain why. Why do you sell these stocks here, while the market is still on uptrend? Because I don't care what the QQQ is doing. I don't care what the SPY is doing. I don't care what the market is doing. I care what my open positions are doing and the feedback I'm getting from my open positions. So I'll explain that here in a little bit. So I start selling stuff at the top, and that was what my portfolio was telling me to do, not what the market was telling me to do. So I was making few sales based on the feedback in my portfolio before the slam on the QQQ. Mega caps started kind of cracking from NVIDIA to Microsoft to Google, Amazon, and on and on. And then a few other things unfolded here. Is 3 days after this big reversal, 1, 2, 3. I've got knocked out of many positions on one day. FTI, Crowd, SRPT, KRYS, GMED. And you notice what happened here. After my positions knocked me out, we got a sizable gap down. What was that gap down here from this close? Let me just do that. List close. I can't remember that day. Did this close? That was 1.6% gap down. Did I know we're gonna have a gap down here? No. My positions kicked me out. And this is where your trading gets transformed. When you stop fighting with the market and you let the market and your positions and your stop outs and your plan dictates what your next move is going to be. I got stopped out, and then you have the gap down. And then can't recover, obviously, on the gap down. I got 2 more stocks knocked out. We'll take a look at AMD here and what was my plan for it. And then the next day, I lost more stocks. At this point here, after the sale of HIMS, I was 80% in cash. I didn't panic and sell everything here. That wasn't the plan. I got knocked out on a lot of things before and then few after. And then I was still 80% invested here because SMAR and then ITC were still open positions that were holding up. And there was not a lot of reasons to sell. The market was going down. They were holding up. SMAR got knocked out when the QQQ lost its 50. And then when we were trying to turn back up here, I took a shot at PLTR. We will take a look at that, trying to get back into the market, right? So we stabilized. This is 1, 2, 3, 4 days sideways. And then we get back up. So there's signs that potentially maybe we bottomed and we start building the right base. So on this day here, I took a shot at PLTR and get stopped out on the same day. So get stopped out on the same day. At this point, my only open position is ITCI. And then on the gap down on Thursday, this was Friday, I got stopped out, so I'm 100% in cash. And then Monday, gap down. You guys remember that? And I was totally in cash. No worries, just waiting to see what the market will do. And then 1, 2, 3, and then 4, 8, 8 is when I bought my first position, UTHR. So we'll take a look at that as well and why I did that. The thing that this was just a pilot getting back into the market from cash with good profits that I was able to keep on the way down. So mentally, I'm ready for a pilot. I wasn't beat up on this. Going into cash is not beaten up. It's how I went out of the market. So let's take a look at a few of these to see how I got out of the market before we start looking at the ones how I got into the market. So on Amazon, Google, PLTR, I'm just gonna go through these quickly just to show you where I bought them. And then I bought them in this area here, and then I sold them here. So let's do that. Let's do AMZN. And I'm gonna go through these quickly because there's a lot of them. There's really not enough time. I bought AMZN here. Actually, let's do one thing. What I'm gonna do, let's go back to QQQ here. And then I'm gonna put, let's do on the reversal day here. Oops, sorry, take that back out. And I'm gonna put that up on the above chart. So I have that on my other charts. So now if I save this and I go back here, it's interesting, didn't show up. It should show up. Oh, we're gonna go through these here. Yep. All right. So now if I go to AMZN, you see that line. So I want to have a reference of that reversal to where I was taking action. So I bought Amazon here and I sold it, what did I say, on the 7th, which is let me see here, on the 8th, 7/8. I sold it here, July 8th. And the reason why I sold Amazon, and even though I wasn't doing anything wrong, so I sold Amazon, and what else did I sell? Google and PLTR. So let's take a look at Google quick. Google I bought here, coming out, and then I sold it on the 8th, right here, same day. And then let's take a look at what PLTR was doing. PLTR, I'm trying to remember where I bought this. Oh, bought it right here, coming out on the 27th, and I sold it on the 8th, right here, kind of hanging man. Here's this chart, this line is hanging man, candlestick. So I sold it here, and the reason why I sold these three is because not because they were doing something wrong, but because my feedback from my other new risk that I put on was not working. And this is extremely, extremely important. So let me go back here. I was putting on more risk on this up because this up, up, pull back, up, pull back, up. Seems like we're on our 1, 2, 3 wave coming back up. So we're looking bullish here. I was putting on more risk. I still was not 100% investing or a margin. The new positions that I was putting up here were not working. They were stopping out. I was taking on losses from new risk that I put on. And I've been doing this for a while, since 2006. When that happens, that means the market is not as strong as the indices is telling you it is. And this is what I mean by I'm acting on the feedback from my portfolio, not from QQQ and SPY. This is why I was selling some of the stock that I have, because I was getting no traction to losses on many of the new positions that I was opening here. So that was a warning sign to me. If the market is strong, my new risk that I'm taking on should be working, and it wasn't. So that was my clue to start taking profits on some of the stocks that I have. And I've decided to sell Amazon, Google, PLTR. And if you guys remember, let me go back to IWM. IWM was firming up here, and under the surface, there was a lot of trends in banks setting up and all of the value setting up versus growth. So it was all playing out. I'm seeing value setting up, growth. I'm a growth stock trader. A lot of the positions that I was putting on in this area was not working. So I start selling growth and open positions that I have because it was looking like we're getting weak in that space, and then there's potentially money rotating out. And then I was seeing a lot. FRPT was sold on the 9. Let's take a look at FRPT and where I sold it. I sold it on the 9 this day right here. I bought FRPT coming out here, right here. Okay, this reversal on high volume on FRPT on a growth stock, this was happening on many growth stocks on these days. And that was driving my decision to start selling some of my winners. I was seeing a lot of this on growth stocks in this area when I decided to start selling in this area, when I start this cycling right before this big reversal. Okay, so hopefully that kind of makes sense why I was deciding to start selling some of what I hold, some of my winners here. So FRPT gets stopped out on that big reversal. Halo, again, same logic. I decided to sell when I was seeing a lot of selling in growth and value taken off, and a lot of selling in growth. So I sold Halo here on this candle, on this reversal. Obviously, Halo is much, much higher now, but that doesn't matter, right? Does it? What's your goal? Is your goal to know that you're right and be right, or is your goal to make money? You got to decide what your role is. I am focused on making money. This trade doesn't matter. One trade doesn't matter if it's lower after I sell it, if it's higher after I sell it. So Halo, I sold it here, and then you have FTI, Crowd, and all these stuff. So let's take a look at them quickly. FTI, let me just do the date here on the 16th. Oh, SMCI is another one. So there was a lot of signs. I'll show you SMCI before we go to the others. So let's do SMCI, and that was on the 15 right here, because I bought SMCI on this day coming out, and that was after the reversal. Okay, but this was really setting up. This stock moves when it wants to move, and I'm interested in getting into it. Broke the downtrend, and then it's calming down, tightening up. Yes, there's still a lot of issues in this setup right here. You know, OBV down, just not showing signs of accumulation, and obviously that was the correct move. But it was tight enough here to take a shot at it. I bought it here, and then on the 15 right here is when I got stepped out with this reversal as well on high volume. So I was out. And then you get these guys here. So let's take a look at FTI on the 16. Was that on the 16? Sorry guys, we have to go through this quickly. On the 16, FTI on the 16, right here on this reversal, high volume, shooting star candle. So I get that out, especially seeing these reversals, especially seeing how FRPT reversed, how other stocks, how SMCI is not working. So I start kind of looking for any sign of weakness. Shooting star on low volume, stock is out, right? So I sold it here. So let's take a look at Crowd. Crowd was an attempt to buy, and then it did not work, and I got out. So I bought Crowd on the 15, and it was sold the next day on the, let me see here. Yep, it was sold the next day on the 16. So Crowd was bought right here, and you guys can pause this and take it slower if you want to. But I bought Crowd here, and then got slammed the next day, and then I avoided this gap down. So I was out here. It didn't take my stop out. My stop was below, and this is why, you know, I shared my my equity curve over the weekend on Saturday, and this is an example of my stop loss is low. So let's take a look at that here. These stop losses very strict and very aggressive on the stop losses, and this Crowd is one example. So my stop was down here when I bought it here, was down here below the low, but once this came up and I'm seeing action that I'm not a big fan of across my other stock and my recent open positions, I am quick to move in stop to even, or I'm quick to moving it up, or I'm quick to sell if the day closes in a fashion that I'm not a fan of. So this close here, opening and then selling all day long and closing at the very bottom of the day, on a fresh risk that have no cushion, I kick it out. So that's how I kicked out CrowdStrike, and it's almost like 1% below my entry. So that's a practice that I do a lot on many stocks. So that's why that's a little low. Let's keep going here. SRPT, I think this was also another one that did not work. SRPT on the 16, yep, right here. So I bought SRPT coming out here, so potentially rounding up after a gap up. So I bought it here, and then next day was okay, and then here's your reversal. So I just kind of knocked it out on this reversal as well. Obviously, this is what happened after, especially CrowdStrike. And then KRYS, it's a relatively good trade. I bought it here, coming out here. So I've held that for a while, and then I said what, sold it on the 16. Again, spinning top reversal right here. So I sold it right before the close. We're going through these quickly, and then GMED. GMED, I bought it multiple times. I bought some here, and then I bought some here, and then sold it on the 16, which is right here on this day. The reason why I sold it on this day, again, I'm looking for a reason to be out because I am not liking the growth action behind the scene. 16 right here, if I zoom in, it's a spinning doji on high volume, which looks like churning to me. Lots of buy-in, but no price progress is a sign of potentially exhaustion from this move. So I sold it as well. And then obviously it came back down. I would have not withstand this drop in the face of earning come in. So potentially this is a good sale. And then we've got AMD and HWM stopped out on the 17. AMD. This is exactly what I'm talking about. This action here is what got me to just be very defensive, tighten the stop, and move to break even or tighten it or something at the end of the day because of action like this. I bought AMD here. You guys know that. I bought AMD here, and then I wanted it to pull back and give me a pullback buy so I can size up, but that didn't happen. This instead is what happened, and I got knocked out break even, or maybe just a little bit less than break even, because I put my stops right below my pivot, or sometime it fills in but your bid is lower than your ask. So I don't really care about being, you know, up 0.5%. I would rather have it, you know, risk that negative 0.5% and give it just slight room below where I bought it. But this is the action that was really just crazy, and I was just being really defensive. So AMD got knocked out. HWM, I think I tried to buy on this pullback. Trying to remember where now. Yes, right here. I bought it right here. So this is on the 15 and looked really good on that day, and then the next day, boom, got slammed, got stopped out, right? Now obviously it's a lot higher, but it doesn't matter. This is how things looked on that day, right? So you risk first, you gotta manage risk. Doesn't matter what the stock does after the fact. But also, does it really matter? Again, you wanna be right, or you're trying to make money, right? So I'm getting knocked out of these stocks like that. But over the weekend, I just posted about my equity curve. And you want make money, or you want to be right? One trade doesn't matter. It's about all the trades that you do, and it's about how your equity curve looks. I've talked a lot about it on X. It's relatively not that hard to make money, but it's extremely hard to keep it. That's why traders don't make money in the market. It's not because they're not making money, it's because they can't keep it. That is extremely important. People say, well, I can't make money in the market. They are, but they lose it. Their equity curve is up and down, and then up and then down. The equity curve that you want to see is up, and then when the market is rough, you go flat to a bit of down. And then when the market is back on, then you floor it. And then when the market is rough, this is the period when the market was rough, from that July to August. That's this chart here, July to August, and that's reflected in my equity curve. But it's an okay drawdown. It's a smooth give back that you have to expect, because otherwise you need to be selling on strength for every stock that you buy, and then you floor it when the market is back, right? So that's what you want to focus on. It doesn't matter if you're right or wrong on one stock. It's what are you doing with your account? How is your account trending is what matters, right? So let's go back. I know this is taking a lot of time. HIMS was another good buy. I was really excited about this setup here. The setup was right here, and I bought it coming out, and it was looking really good day 1, day 2, day 3, and then boom, get slammed down with the market, right? Held the reversal on the QQQ, but then gets slammed down. So when I'm seeing a lot of this, AMD, this, FreshBet, and tried CrowdStrike, didn't work. Tried HWM, didn't work. So there's just SMCI. That's the feedback that you're getting. So I am 80% here cash in the market. SMAR got knocked out on the 724, so it held way better than many others. SMAR I bought here. And then 724 right here on this reversal. And then I went back in here, and actually I sold it yesterday. Earning coming soon, and I got out here. So bought it here, sold here, bought it here, sold here. And then let's see. so SMAR is out, and then I am only with ITCI position at this point, okay? 90% cash, I think there was a 10% position. So now I'm waiting, I'm sitting, not trying to do anything, and I was very small here trying to buy anything anyway. So 1, 2, 3, 4, 5 days. Looks like we're bottoming, we're heading, potentially heading higher. We kind of broke that, and then I said, okay, let's try to take a position here. So PLTR on 8.1, PLTR on 8.1. Where's 8.1? Let's find 8.1. 8.1 right here. So I was in this one right here. I guess said I sold it here, and then I would like to get back into this. They're selling here, so there's a lot of people looking at this stock. I wouldn't buy it up here. Selling. So let it slam back down. It's fine. Volume drying up. On balance volume still doing okay with the UD red, which is above 1. And then right here is when I attempted to buy it. I bought it right here coming out. So I essentially bought the high. And you're going to do that a lot in my style of trading. You're going to buy the high on so many stocks. But again, doesn't matter because this is what you're going after, not what this trade does. What this trade does makes no difference as long as you're buying from a appropriate setup. So I thought this is maybe up, pull back, up, and I'm buying it, turning around, right? But that obviously did not work, so I was knocked out right away. And then my last position is ITCI. ITCI, it's interesting because I thought that's going to be a big winner because it held up really well while the market was pulling back. So I bought ITCI. Where did I buy ITCI? Give me a second here. I think. Oh, I bought it right here. I bought it right here. And so coming out right here. So pull back buy. Let me just do that. Up, pull back, up, and I bought it, turning back around. And then it held up really well. Market is pulling back. A lot of growth stocks are crashing. So I kind of wanted to keep this just break even. Let it just do that pull back. I thought maybe this is going to do pull back like this, turn up and go. And then interestingly, I got knocked out of this on Friday before the gap down right here. You see how it pulled back and it knocked me out, break even on this, and then closed in a doji, and then a gap down. So I would have taken a much bigger loss have I not listened to my stop. So I was in cash right here, cash, right before the gap down on Monday. Now, when the gap down happened, there's reversal, so on the 200, and then I am watching throughout this whole time going down. I'm watching what's holding best, what's holding the most. And you know, I've just 2 days ago I posted fact on the stocks, and it, you know, 99% of the biggest winner above their 200-day moving average, where above their 200-day moving average before they make their largest move, and then 96% were above their 50-day moving average. And then I got folks, you know, telling me that, you know, you make the big money on crashes, trying to catch, you know, stocks that have been beaten down. Okay, sure, you can do it that way if that works for you, but that doesn't. And the facts tell you that 99% of the stocks were above their 200, so they were not crashing, and 96% were above their 50, so they're not crashing. So I'm not going to be doing that. You can. So when you look at these now we're turning back, and we have no follow through yet. Follow through did not happen until here. So let's actually go back to QQQ, and then put the follow through where we need it. So let's do follow through right here. The follow through didn't happen until here. We're going to put that line. Now let's go back. Let's go and talk about the stocks. So what I don't short. So I was watching what is holding up the most. Look at these names, guys, and then go and look at the charts and see how they were holding against the general market going down. You're going to see them, they're all above their 200 and they're all above their 50. Maybe low cheat something right below their 50, but they have signs of accumulation, they have relative strength, and then they have they're above the moving averages, still in an uptrend. So let's take a look at UTHR. So the reason why I wanted to get back in the market. This is a reversal, but you got the selling at the top. This is a strong day, but you get selling at the top. And this is a reversal, so selling. So we're still sellers here, here, and here. It's not time to get back in. And for other stuff that I was seeing in the market, but we'll just focus on the QQQ for now. And then on the 8, potentially changing the character of the market. We open, gap up, middle of the range, and then we push higher all day and we close strong. We haven't closed strong in many days, right? Selling, 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 character change. So UTHR was setting up and I got in right here. So look at this stock. You can't tell that they're selling. This is earning, gap down, and then it held tight while the market is going down. So, let's go back here and let's do UTHR. UTHR here. Okay. So I bought it right here. And then obviously I got stopped out a few days after. So this is stock. Now it's a lot higher, but doesn't matter. So let's actually take this as a really, really good example, because there's a question that I get asked a lot. How tight do you want to stop and why your stops are tight? My goal is this. There is many ways to get to that goal, right? You can get to it by putting stops that are 4, 5, 6, 8%. And you can get to it by being very, very, very aggressive on your stops. What works for you is the right way. This is not the only way. This is what I do and what works for me. Here's UTHR as a really, 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 really good example. UTHR, I bought it right here. Let's do this because there's a lesson here. So let's do this a little bit slower than the others. I bought UTHR here. Okay. Let's do this in front. All right. Why? Because relative strength. And then just high volume on earning doesn't mean as much as high volume selling on no earning. Okay. Unbalanced volume, very strong. Market crashing. I mean, look at the market here. From here, right? Look at the reversal on the other growth stock, what they were doing, and look at this stock. Just no one wants to sell it, right? And then even on this big drop here, right? Remember this big drop right here? What was stock doing? Remember the Monday when the market opened really down? What was this stock doing? Right here. Okay? So held up above the earning. This was showing all kind of signs that this is being accumulated. And if there is a shot that I'm going to take at coming back to the market, I want to get back to the market riding the strongest stock in the market that's not extended. There's a big difference between strong stock that held the pullback and an extended stock. So I want to be on the strongest horse that is left standing in the market. And that was one. And I bought it and it closed at the high of the day. Okay. So immediate feedback that I'm potentially right in taking on the risk. So I don't wait for this to be up here for me to start taking on more risk. This was already tight, right? So here's the thing. This stop was 2.5%, and below the low before the day right here is 2.2%. Extremely tight, right? Now, I can keep it tight and just take on more risk. I'm managing risk by having tight stops. The other way to do this you could have put your stop all the way down below earning, below this day right here. And that is 5.68%. And that is absolutely acceptable. And you would have been still in the stock and up. But that's not how I do it. I rarely put a 5, 6, and 7, and 8% stops because I want to control risk very aggressively, and I am okay getting back on a trade if I get knocked out. I want the trade to just go. I've been doing this for a very long time. I have a sense when the setup needs to go, and if it doesn't go, I want out. So no, my stops are not day trading 2%. This is a perfect example of how I can get into a stock with a 2% stop and how I can be aggressive in moving that stop up and take on more risk because I want the stock to just go, okay? But this is valid, and you just got to figure out what you're comfortable with. So does it matter that I got knocked out of this? No, because I got many more that got me to this. Okay, so I think people get so just consumed by just the one trade, and trading is never about just the one trade. It's about the end and where you're trying to go and how to get there. There's so many different ways to do it. So this was my first entry. And then the day after, because this worked, and what do you mean by work? It closed strong. And then the next day, it just gave me a doji. So I'm comfortable here, and I already have a small risk. So I'm going to floor it. And the way I did that was with Now and BIX. So I bought Now on the day before, and the day after. What was that? The 9. The 9. Right here. Okay? So what was this stock doing? Same, and that's before the follow through, right here. Earning. It was a stock that's telling you it wants to go higher. It broke out when the market was pulling back, and then it couldn't hold it because the market is really weak and selling off. So it got slammed with the market, not because the stock is bad. It's above a uptrending 200, above the 50, trending, above the 10-week, above the 21. Market is in a free fall essentially here, 16% on the QQQ, and you have a big cap stock that is doing this. What is it telling you? It's telling you institutions want this stock and they're supporting and buying it. So I bought it coming out here, and then what did it do? It gives me positive feedback the same day. What was my stop? My stop was below this low. So let's go back and do that again, right? So bought it here, stop 2.2%. This is how I'm managing risk, and I'm doing the progressive exposure thing. Could I have done the stop all the way down here? Yes, this is 7%. Still valid. And you could have. But that's not how I do it. So I was playing very, 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 very aggressive. And then once I get this, and then I get this, my stop is moved, right? Because if this reverse and take this low and this low, is it doing anything wrong? Not necessarily, but it's not doing what I wanted to do. And what did just say a few minutes ago? I want the stock to just go. And if it doesn't, I want to step aside because I know there's a lot more opportunity. So MIRM was, so now I have these three, and let's take a look at NBIX. NBIX didn't obviously work, and thankfully I was out of this. And NIBX I bought here, right here. And then again, what is this stock doing while the market is crashing? Look at this. What is this stock doing while the market is crashing from here all the way to here? It's going sideways, right? The stock is going sideways while the market is crashing. So I bought it right here, and I really thought this is going to be a big winner. I sold it on this reversal right here. I just did not like this reversal, and I have other stocks. August, this on the 14, and this is the complicated part. It's really hard to explain. This is the complicated part. On the 14, we look at the 14 right here on the 14. When I decided to sell, because even though we had an up day here, this was looking a bit of a reversal, and I had few things that are pulling back on me because I was in UTHR, now BIX, MIRM, NEM, and then I bought TEM here, MPWR, QTWO, and things. So I didn't have tons of profit. It was 2-3% on each of these stocks, 5%, some higher. But when this was pulling back, and then pulling back below the 21 EMA, this was looking a bit ominous during the day, and I was under some pressure. And when that happens, I look at my weakest performing stocks in my open positions, and I kick them out because I want some relief from the risk pressure that I'm under, right? So this on the 14 right here, when the market was pulling back, because you look at the during the day, this was all the way down. I was under pressure, and this was pulling back, and it was my worst performer because I bought it here, and then it's back to break even on slightly under, and I kicked it out. So I start kicking out stocks that I don't have the highest cushion on, because what is that telling me? They're telling me they're my weakest positions. Why? They're my weakest horse. They're not ahead of the pack. I'm not gonna start knocking out my first horse on the track. I'm gonna knock out my weakest horse on the track, and that was NMBX at that day. So I kicked it out. Just quickly, what I'm trying to make. So MIRM is another one, and I bought it right here. I did a video on this one. This one just fantastic setup. I bought it right here. Again, what is it doing before the follow through day? What is it doing? I mean, you can't tell the market is selling off. Okay, above the 200, above the 50, above the 10 week, above the 21 EMA, tight. That's what I do. Some traders want to catch falling knife because that's how they think they can make big money. Good for them if they know how to do it. I've been doing this since 2006. I got my head handed to me when I tried to do that, to catch a falling knife. Okay, so I won't do that. I've done it, and I'm not gonna do it again. So again, this is one of my stocks, and then NEM. Look, guys, it's all the same story. Above the 200, above the 50, above the 10, above the 21 EMA. They don't have to be above the 21 EMA. Like I said, sometimes they can be below the 50. But market's selling off, and this is holding tight. And I bought it coming out here before the follow-through day. Okay. And then let's take a look at TEM. Obviously, I made one separate video on TEM. I bought it right here. Okay. And why? Why am I buying all this? Because this is working. This is working. This is working. Break even. Working. MPWR. I bought it coming out right here on the follow-through day. Again, this is a semi chip with the semis getting killed. I showed you guys AMD, and this guy is hardly below the 50, and it's already above the 50 when I bought it. And yes, there is scary volume here, but you need to take into account the market. This is heavy volume, but the stock refuses to go down, right? So it's being supported. Why is it not at its 20? Why is it above its 50? While many other chip stocks are below their 50 and looking a lot horrible than that. And I made some posts on X about the chip stocks and about NVIDIA around this time. But look at this guy, right? I bought it right here. And then QTWO, again, above 20, above the 200, above the 50. What is that called again? QTWO, right here, bought it, coming out right here. Okay. Again, what is the stock doing while the market is selling off? Market selling off, stock is doing this. it's going to be on my radar. Okay, relative strength, unbalanced volume, relative strength, going sideways while the market is crashing. I'm buying it right here, coming out. And then this is what I'm talking about when I see no pressure. This is what I want, right? I'm not going to sit around, wait for the stock to play around here, okay? When I buy it, I need it to go. That's exactly what I'm looking for. Exactly what I'm looking for. But to do that, you have to know what you're doing. This takes a lot of years. And when I buy it, I want it to go. I'm not going to play around when it's doing this and not going, okay? So my stops are almost always going to be tight. Let's do one more here. So let's do spot. Spot, I'm still in it as well. Spot, I bought it. Oh God, I think I bought it. When I bought it, right here, a few days after, or right here. I can't remember. Anyway, in this somewhere. And I actually sold it here, and then I'm back in it here. So this is a perfect example of how I am willing to go back and how two paths could lead to the same place. I bought it here. I think I bought it here. Let's just assume I bought it here. My stop was below this low here, so 1.92%. Okay. When we went up 1R, 2R, whatever, and then we start having reversals like this reversal right here, and what did I say? I have many of my other stocks are performing way better than now because it's doing this, like selling, 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 and then a doji right here above my buy point here or here, whatever. So I moved it to break even. I think it was like break even, right? Is this tight? Yeah, it is tight, right? But I want to be out and then I'll come back in, right? So I got stopped out, maybe like I say, maybe like a 0.1% loss or 0.2% loss. And then when it started to show me that it's finding its footing and it's turning back up, I went back in right here 2 days ago. So I'm back in the stock. Could you have just, let me delete those. Could you have just bought it here and then put your stop all the way down here, 5.6%, 6%? Yeah. So do what works for you. All right, let's wrap this up. And then NE and LEN, I posted about those. LEN is really a nice setup. I sold this actually here. LEN is beautiful setup. This is your pivot. I bought it coming out here. I got a squat, nothing to do. Again, what did this do, right? I buy it, and then it goes. It's exactly what I want. Tim, I buy it, and boom, it goes, right? So that's what I'm looking for, because that's the stock that I want to be in. That's how I manage risks. But that means your percentage win is going to be low, right? That's why I have 30%. And in 16, I didn't trade much on this month because the environment wasn't very good. But that's why I'm in the low 30s to high 30s, 40s, 50s on really good environments, because I just want them to go, and not every stock goes. And this style is not conducive to everybody, because not everybody is willing to sit and take on 60% of their stocks not working, right? So there's going to be a lot of now, right? You get in, no, not now. What was that? Let me go back here. A lot of spot. There's going to be a lot of spot, right? Like this, and then out and back in. So that's what drives your low percentage win rate. So I hope that helps. And now obviously I bought quite a bit of more stuff, like GEV. I'm in GEV. I'll make a video about this separately, how I tried it twice. It stopped me out. I'm back in GE. I'm in GE. What else? I can't even remember what am I in right now. So yeah, a few more, but those are from last week. So hopefully that helped. Long one, but I don't think you see this done anywhere. If you do, point me to it. I would like to watch and see how others did it. Not just me. I always interested in seeing how other traders, successful traders, kind of navigate pullbacks and getting back in. Really, hopefully, I hope that helps. Leave comments, spread the word. Only 5K subscribers on my YouTube channel. So I'm trying to help people, provide some value, but it is what it is. So spread the word, like and retweet or re-X or repost once I put this on Twitter. I really appreciate it, and subscribe. Thank you guys, and I'll talk to you later.